All right, so how does SoftBank's big Nvidia move impact the broader AI landscape? Let's talk about that and more with Futurum Group CEO Daniel Newman. He advises major tech companies on things like artificial intelligence. He's at the NASDAQ where AMD's Analyst Day is taking place. Otherwise, Dan, we would welcome you here on our lovely set in New Jersey. Was I making too big of a deal about the $76 billion? Because if your internal documents say you're going to lose $76 billion in 3 years, even for OpenAI, that is a lot of money.
Yeah, it's a great point. Good to be with you, Brian. The overall bubble case, we've heard the Burry story come up, is largely rooted in this OpenAI $1 trillion plus of expense, multiple years of losses. Is this going to become a problem? And I've had the benefit of spending time with some of OpenAI's investors, some of them that have come in at rounds at, $250 billion. And I've asked them the question about this kind of endless liquidity. And the bottom line is that this is not a company that's just going to be the application layer. This is a company that its biggest backers and investors believe will become the largest hyperscaler in the future. So it isn't just going to compete for these software and for these ChatGPT and video making models. They are going to be focusing on taking over this AI layer, going down the path of Anthropic, playing in the enterprise, developing these bigger models, and then ultimately developing a model to make money. But the patience, for me, it's very hard when you see what Anthropic is doing. But at the same time, the investors said the appetite, just like Lisa Su said today about AI, is insatiable. They have oversubscribed rounds, and that $1 trillion IPO is very real. So they can bet on this long term, even if they don't get to profitability, and they'll still have the money to keep rolling forward.
Okay, Michael Burry, best known from The Big Short. He was a short seller of subprime. We believe, because he posted it to X, and we looked at his 13Fs and some other things, that we believe he is short Nvidia and maybe Palantir via the options market. Again, we can't know. It looks like he is. He also just posted to X, kind of accusing some of these hyperscalers of manipulating accounting rules, because what people don't realize, that semiconductors, like the chips that Nvidia make, they die. They need to be replaced. And that he thinks they're not factoring in a fast enough replacement cycle, effectively kind of skirting accounting rules. It's complicated. I tried to make it simple. Dan, is there anything here?
Yeah, is there a there? I mean, we talked about CoreWeave and it's selling today under pressure. It's not directly related to depreciation, but one of the concerns around CoreWeave has been specifically this multi-year depreciation. It is buying so much Nvidia. Will this hardware last for 5 or 6 years? There's really a story on both sides here. TPUs that Google produced, these Hopper instances, we heard the CEO of CoreWeave talk about renewals of contracts on these older chips for 95% of the value still today. So these things are lasting longer than a few years. But at the same time, the argument on the other side is that these new chips, Nvidia, Jensen's coming out with a new generation twice a year right now. And these new generations are so much more efficient. And with the cost of infrastructure, the demand on energy, there is a there. Having said that, I think he's grasping at straws to say it's fraud or suggest they're doing something illegal. I think they're using the maker's depreciation schedules, the accelerated depreciation schedules that are available to them to show income. And as long as these things continue to run and can continue to be monetized, I think that these companies are okay. And I think they're following rules and depreciation the way it's been intended to be followed.
Because I fair enough, but I want to make this point because I talk a lot about energy, as you know, Dan. We talk a lot about oil wells. They can go dry. You need to keep investing money so you can get new oil out, right? And many people would argue that the oil industry is underinvested. AI and the hyperscalers, they're the same way, right? These Nvidia and AMD and whatever chips you're using, they don't last forever. In fact, some people might suggest they last a couple of years, then you have to replace them. So every couple of years, you're buying more. I don't think that's a story that's widely reported or understood.
Yeah, I think there is buying more. I think that the every couple years that all of them need to be replaced isn't true, but some of these most intense workloads are definitely, you've heard Sam Altman and Elon Musk say our GPUs are melting. This is that capacity constraint. And to your point about energy, there is a reason that these new interesting AI utility companies, the Cyphers and the Iron Limiteds have been popping up of interest because they're bringing together that energy capacity, high performance compute AI and building it all in one place. CoreWeave today got knocked mostly not because of demand. He said insatiable demand as well, right on CNBC. I heard him. But they got knocked because building these data centers is hard. You know this from being in energy. Building the infrastructure to build the capacity is hard, and CoreWeave doesn't control it. And that is one of the biggest issues right now is that how fast we build is rate limited by things like turbines and thermals and things that have nothing to do with the chips themselves, even if we can build those fast enough.